Hi, this is Charles Kelly, Money Tips. Today I have a guest with me who is a mortgage broker. His name is Mitesh. The company is called Our Mortgage Broker. Good morning, Mitesh.
Morning, Charles.
Morning. So today we're going to give you some updates on what's going on in the mortgage market and also talk about some things that you may not have heard about before. You may be unaware that you can get a mortgage if you've got adverse credit in the UK. Do have a look at that. What about older borrowers? What about, because there was a thing about a few years ago, borrowers reaching a certain age, maybe they haven't paid off their mortgage yet. They need to, I've got a client, she's on an interest-only mortgage. For some reason, I don't know why she put an interest-only for a residential. And she's reaching the end of that. She's in her late 50s. Can you help those sort of people?
We can. So we've got specialist lenders out there. A lot of the smaller building societies that actually offer specialist products. For clients who are above the age of 50, 55 plus. In reality, your normal lenders will apply a general rule of thumb that if you are applying for a mortgage within 10 years of your normal retirement age, then they will work on the affordability calculation based like a normal mortgage. But if it's sort of not within the 10 years, then what they will try and do is say, do you have a private pension pot? Are you expecting pension income? Then we can try and work things out manually and see beyond that certain age of 65, 67, what income you'd get. So they would have to then discard what you're earning. And then it gets a bit more complicated. And generally 9 out of 10 times the case is unaffordable. So there are other products in the market for clients. So there are some products in the market for clients who are looking to just switch the mortgage across,
not
borrow any more money. And there are lenders where they're more sort of flexible in the way they look at those type of mortgages. So that's purely remortgaging pound to pound from one lender to another. This is for older borrowers, and they'll be more than happy when to look at 6 times lending, or they've got a model in place that they'll be able to help those clients. If you're then looking, let's say, to raise cash from a property or doing anything else, then we have lenders in the market where they look at different types of products that are available. So I'm not going into too much detail on the individual ones, but just to get a feel, and then I guess your viewers can then also do some research themselves. So there's something called a retirement interest only option. There's something called later life lending, and then there's equity release. Now, what happens is when we get a client who is an older borrower, we'd have to explore with them to understand which option would suit them best. So basically either a traditional route that works with a normal lender that you place a case with, or do we then go down this route of exploring the other 3 options? Retirement interest only option, later life lending, or is it going to be an equity release? So we'd have to analyze that. Sometimes lenders will guide us and tell us, look, you can start with one option because of the need right now. This is what you told us. And then in the next 10 years, they can then switch from this to this product, and then eventually have a review. And then if equity release is the answer after 10 years, then maybe after 10 years is what, they can go down the equity release option, because maybe at that point it'll be more relevant. Or if it's affordable based on the pension income and other investment income they have on the tax return, and it's looking pretty good, we could lend up to, let's say, 4.5 times their income, and they're good to go, and they can have a mortgage of 95 years of age. So or a term that's there on paper, but it's there until they've got a change in the circumstances. So let's say they had to move to a nursing home. So I don't want to go into too much detail. This gives you a flavor of kind of the type of products that are available there for older borrowers. And this is something that's happened, I would say quite recently, but the last 3-4 years at least, there's more choice available for older borrowers.
Yeah, because in the past, I think there was only equity release, which is basically for people saying in their 70s, 80s, 90s who want to, you see them on TV, I bought a car with my house. They don't really explain to them it's actually a mortgage they're taking on. They call it equity release. Sounds much nicer than borrowing money and getting a mortgage, but it's basically a mortgage, a self-certification kind of mortgage, but the interest rolls up, and it rolls up at 5 and 6%, so it can eat into the equity quite a bit, but it does enable people to get money out of their property to give to their children and grandchildren to buy property and also reduces the value of their estate.
Yeah, so basically in that scenario, what's really happening, what you're saying is that they aren't actually making any monthly payments towards the money they borrowed. So the retirement interest only option, for example, as it states, retirement interest only, which means it's an interest only product. So depending on whether it's affordable, you could potentially qualify for that product, and it's worth exploring because it should be cheaper compared
Maybe
to
get better rates. Yeah,
better rates. And
but you need income for that.
exactly. Yeah. So you'd have to explore it. What we would say is that, like let's say with bridging finance is generally going to be more expensive. We would always say to clients, look, if we can find a route where you can avoid bridging finance, we'll always explore those routes. So we do a first charge mortgage or even a second charge mortgage. Again, I don't want to make things complicated, but if those areas don't work, and if bridging finance is a solution because of whatever reason, and you need it on a short-term basis, then we will explore bridging finance. So let's say the property is not habitable, a lender cannot lend on that property, then you go down those short-term finance routes. In the same way, with older borrowers, we'd have to take a view on it. Obviously, we'd have to take greater care as an older borrower to make sure we spend more time. Maybe you invite a family member to be present as well, and make sure they might need to take independent legal advice from a solicitor, just to make sure that whatever options they're taking is the right one for them.
Okay, great. So that's great. I think that we've covered quite a lot there, but thanks for that. And we'll put your contact details up. I think LinkedIn is the best way to contact you, but we'll put that up on the notes for people who want to contact Mitesh.
So,
okay.
Yeah.
Great. Well, thanks very much for your time, Mitesh.
Great.
I really appreciate it, and I hope you've got some good information for that. Put it in the comments, and please like and share, so we can get this out to more people. Just to remind you, next Wednesday, the coming Wednesday, I've got a free webinar on managing your money so that you can learn to become financially free, whether it's through property or whatever. And that's at 8 p.m. next. And I'll put some notes up about that as well next Wednesday. So thanks very much, Mitesh, and I'll speak to you again soon. Thank you.